Welcome to another deep dive with us. This time we're putting on our financial detective hats, and we're going to closely examine the recent financials of PTC India. You know, they're a big player in the Indian power trading market, and we're going to see if we can uncover any clues about, their current situation and maybe even predict their future. So to do that, we've got some excerpts from a recent financial document that PTC India released. I've already had a chance to glance through it, and I have to say I'm seeing some things that are making me curious.
Yeah, financial statements can be like a puzzle, right? I mean, all the pieces are there, but sometimes it takes a little bit of digging to figure out how they all fit together. But that's what we're here for, right? To try to put those pieces together and see what the bigger picture looks like.
Absolutely, and sometimes the most interesting stuff isn't even in the main numbers. Ever notice that? It's often hidden away in the footnotes, the fine print, where things get really interesting.
Oh, absolutely. The footnotes are where you find the juicy details, the stuff that really helps you understand the story behind the numbers. And speaking of juicy details, did you notice that PTC India actually reported a net profit for the last quarter?
I did see that, which on the surface sounds pretty good, right?
Oh.
Companies making a profit, that's what we want to see. But I feel like there's a but coming.
There is a but. When you dig a little deeper, you see that their cash and cash equivalents actually took a pretty big hit during the same period.
Okay, wait a minute. Profit, but less cash on hand. Help me understand that. How does that work?
Well, think of it like this. Imagine you're running a lemonade stand. You sell a lot of lemonade, and you're making a profit on each cup. But let's say your pitcher has a leak, and you're losing lemonade faster than you can pour it in. Even though you're making money on paper, you're not going to have much cash left at the end of the day, right?
I see what you mean. So even if a company is making a profit, they could still be in trouble if they're not managing their cash flow well.
Exactly. And
Mhm.
in PTC India's case, we're talking about a decrease of over 31,000 lakhs in cash and cash equivalent.
Okay, hold on. For our listeners who may not be familiar with that term, can you explain what lax means?
Sure. Lakhs is a unit used in India, and it's equal to 100,000 rupees. So 31,000 lakhs is a significant amount of money. And when we talk about cash and cash equivalents, we're basically talking about the most liquid assets a company has. It's the money they can access immediately to pay bills, invest, or handle any unexpected expenses.
So a drop of that much in cash and cash equivalents, even with a profit, that's a big red flag. It's like seeing smoke, but you don't know where the fire is yet.
Precisely. And it's a signal that we need to investigate further. Why is their cash dwindling despite reporting a profit?
Yeah.
And where's that money going? That's what we're going to try to unpack today.
This is already getting more interesting than I thought. I have to admit, I usually kind of glaze over when I hear about financial reports, but this is like a real-life detective story.
It really is. And it gets even more intriguing the deeper we dig, trust me.
Okay, so where do we start with this? What are the other clues that we need to be looking for in these financial statements to kind of figure out what's going on?
Well, let's take a closer look at this statement of unaudited standalone financial results for the quarter and half year ending on September 30, 2024. This document gives us a snapshot of PTC India's financial performance during that period.
Sounds good. So what are the key things that kind of jump out at you when you look at a statement like this? What do we need to focus on?
So we'll want to pay close attention to things like revenue from operations. That's basically the money they make from their core business activities. And then, obviously, their expenses, their profits, and of course, their cash flow, how much cash they have on hand and how that's changed over time.
Okay, so just to make sure I'm following you. Revenue is like the money coming in. Expenses are the money going out. Profit is what's left over. And cash flow is how well they're managing that cash on hand. Did I get that right?
You got it. You're a natural at this. And we'll also want to pay attention to any unusual items or significant changes from previous periods, as those can often provide valuable insights.
Okay, so let's jump into those financials. I'm looking at them now. What stands out to you right away?
Well, as we mentioned earlier, they did report a net profit, and their revenue from operations remained fairly stable compared to the same period last year. Those are generally positive signs.
Okay. Yeah.
However, we can't ignore that drop in cash and cash equivalents. That's a pretty big elephant in the room.
Right, like that leaky lemonade pitcher.
Yeah.
Okay, so profit, stable revenue, but shrinking cash.
Yeah.
What else is raising a red flag for you? What else are we seeing in here?
A couple things. First, they have a significant amount of money tied up in what they call assets held for sale. This refers to their subsidiary, PTC Energy Limited, or PEL, which they're trying to sell off.
So they're trying to unload this subsidiary. Why is that? Is it not performing well?
Well, we'll get into the details of the sale a little bit later, but for now, it's important to understand that having a large chunk of their assets tied up like this can impact their financial flexibility. It's like having a big chunk of your savings locked away in a time deposit that you can't access easily.
Got it. So that's one thing to watch. What else is catching your eye in these financials?
The other thing that's worth noting is their investment in Sikkim Urja Limited, or SUL. SUL operates a hydro project that was hit pretty hard by a natural disaster, a flash flood, earlier this year.
Oh, wow. I remember hearing about those devastating floods. How does a natural disaster in Sikkim affect PTC India's financial statements?
Well, PTC India has a stake in SUL, meaning they've invested money in that project. And when a natural disaster damages a project like that, it can impact its value. And that, in turn, affects the value of PTC India's investment.
So even though the flood happened far away, it could potentially hurt PTC India's bottom line.
Exactly. And that's why we're paying attention to this. It's a reminder that a company's financial health can be affected by events that seem unrelated to their core business at first glance.
Right, right. Okay, so this is getting more and more complex. We've got a profit but dwindling cash, a big sale in the works, and a potentially risky investment. Where do we go from here? How do we start to make sense of all this?
Well, remember what I said earlier about the footnotes? Sometimes the most interesting details are hidden in the footnotes of financial statements. And let me tell you, PTC India's footnotes are a goldmine of information.
Okay, I'm intrigued. What kind of stories are we uncovering in these footnotes?
Well, one footnote that immediately jumps out is related to the auditors of PTC India Financial Services Limited,
Oh,
or PFS, which is another subsidiary of PTC India. The auditors issued something called a qualified conclusion, which basically means they had some concerns about certain accounting practices at PFS.
a qualified conclusion. That sounds serious. What kind of concerns do they have?
One specific issue they highlighted was related to how PFS handled certain legal expenses. Apparently, they treated expenses for legal help provided to their former MD and CEO as recoverable, meaning they expected that money to be paid back.
Wait, so the company was paying legal fees for a former executive and they expected to be reimbursed?
Yeah.
Seems a bit odd.
It definitely raises some questions, doesn't it? Why would a company pay legal fees for a former executive in the first place? Were those legal services related to company business? And why haven't those expenses been recovered yet?
Right. It makes you wonder what else might be going on behind the scenes.
Exactly. And this is just one example of how the footnotes can provide a more nuanced and sometimes more troubling picture of a company's financial health than the main financial statements alone.
Okay, so we've got these red flags popping up in the footnotes. What other fascinating details are hidden in there?
Well, another footnote that caught my eye was related to communications that PTC India received from the Registrar of Companies, or ROC. Think of the ROC as the government agency that keeps an eye on companies to make sure they're following the rules.
So the ROC is like the corporate watchdog.
Exactly. And they've sent some inquiries to PTC India, which basically means they're asking for more information or clarification about certain matters.
Uh-oh. That sounds like they're under scrutiny. What kind of inquiries did they receive?
One of the inquiries was related to a complaint they received back in 2018. The ROC is still looking into this and has asked PTC India Financial Services Limited for more information to wrap up their investigation. Additionally, PFS and some of its key management personnel received what are called show cause notices regarding potential violations of the Companies Act.
Show cause notices. What does that mean exactly?
Essentially, it means the ROC is asking them to explain why they shouldn't be penalized for potentially breaking the law. It's a pretty serious matter.
So we've got the auditors raising concerns about accounting practices, and now the ROC is sniffing around looking for potential violations. This is getting pretty intense.
It is, and it highlights the importance of looking beyond the surface when evaluating a company's financial health. These footnotes, these little details tucked away in the fine print, can reveal a lot about a company's governance, their risk management practices, and their overall transparency.
Right. It's like those crime dramas where they find a tiny piece of evidence that cracks the whole case wide open.
Exactly. And in this case, those footnotes are leading us down a path of intrigue and uncertainty. We're starting to see a pattern of potential red flags, from questionable accounting practices to regulatory scrutiny.
Okay, so we've got these red flags, but we still don't have the full picture. Where do we go from here to connect the dots?
Well, there's one more footnote that adds another layer of drama to this whole situation. It's related to the mass resignation of independent directors from PTC India's board back in December 2022.
Wait, a mass resignation. That's a big deal. Why do they all resign?
That's the million-dollar question, and it's something we'll explore in more detail in the next part of our deep dive. But I can tell you this. Their resignations were accompanied by letters outlining some serious concerns about corporate governance and compliance at PTC India.
Ooh, a cliffhanger. I can't wait to hear what those concerns were and how this all ties together.
Trust me, you won't want to miss it. The saga of PTC India is just getting started. It's amazing, isn't it? How these little details buried in the footnotes can sometimes reveal so much more than the main financial statements themselves.
It's true. We often get caught up in the big numbers, profit and revenue and all that. But sometimes those footnotes tell a more compelling story. It's like a whisper that suddenly turns into a shout.
Exactly. And in the case of PTC India, those whispers are starting to sound pretty loud. I mean, we've got auditors raising eyebrows, regulators asking tough questions, and now these mass resignations. It's all starting to feel a bit like a corporate thriller?
Yeah, let's get back to those resignations. You mentioned that these independent directors raised some serious concerns about corporate governance and compliance at PTC India. What exactly were they worried about?
Well, there are resignation letters that kind of painted this picture of internal discord and a potential lack of transparency at the top. They highlighted issues like disagreements among board members, the fact that recommendations from the Risk Management Committee weren't being implemented, and even concerns about meetings being called with very little notice, which can be a red flag in itself.
So it wasn't just one or two isolated issues. It sounds like there was a pattern of behavior that these directors found troubling.
Right. And keep in mind, these weren't just any board members. They were independent directors, which means they're supposed to provide objective oversight and protect the interests of all shareholders. When a group of independent directors resigns en masse like that, it's a huge red flag. It's like the referees walking off the field in the middle of a game. Something seriously wrong.
Wow. Yeah, that's a powerful analogy. So these resignations, combined with the auditor's concerns and the regulatory inquiries, it paints a pretty concerning picture of PTC India's corporate governance.
Exactly. And this raises a crucial question for potential investors. If a company isn't being run effectively at the top, if there are questions about transparency and accountability, can you really trust them to manage your money wisely?
That's a good point. It's not just about the numbers on a balance sheet. It's about the people making the decisions and the culture within the company.
Absolutely. And in PTC India's case, those resignations suggest there might be some deeper problems that need to be addressed.
Okay, so we've got these governance concerns swirling around. Let's shift gears for a moment and talk about that big sale they're trying to make. Remind me again, what are they selling and who's buying?
Right. So PTC India is trying to sell its subsidiary PTC Energy Limited, or PEL, to ONGC Green Limited. ONGC is a pretty big player in the Indian energy sector.
So they're selling off a significant chunk of their business. Why are they doing that? Are they trying to raise cash quickly to address those cash flow issues we talked about earlier?
That's definitely one possibility. Remember that leaky pitcher analogy? Selling PEL could be their way of trying to plug the leak and shore up their cash reserves.
Right. Okay, that makes sense. But what's the latest on this sale? Is it a done deal or is it still in progress?
Well, they've signed what's called a share purchase agreement, which is basically a contract outlining the terms of the sale. But the deal hasn't been finalized yet. There are still some conditions that need to be met before it can actually go through.
Conditions, like what kind of conditions?
Well, it could be things like regulatory approvals, due diligence, making sure everything's in order, or even just the sheer volume of paperwork involved in a complex transaction like this. It's not uncommon for large deals like this to take time to close.
So we're in a bit of a waiting game then. But what happens if this sale falls through? What are the implications for PTC India?
That's a critical question. If the sale of PEL doesn't happen, it could exacerbate their cash flow problems. Remember, they're already dealing with that significant drop in cash and cash equivalents that we talked about earlier. A failed sale would be a major setback for them at this point.
Yeah, it's like they're trying to climb out of a hole, and if that rope breaks, they could fall even further.
Exactly. So the outcome of this sale is going to be a key factor in determining PTC India's future financial health. We'll definitely have to keep a close eye on this as things develop.
Okay, so we've got this pending sale, potential cash flow issues, and all these governance concerns. What about that investment in Sikkim Urja Limited that was impacted by the flood? How is that playing into all of this?
Right. The dam-aged investment, as we called it. That's another piece of the puzzle we need to consider. The flash flood caused extensive damage to the SUL hydro project, and it's still unclear what the long-term impact will be on PTC India's investment.
So how do you even begin to assess the damage when something like this happens? Is it like calling in a home inspector after a storm?
Yeah, it's similar, but obviously on a much larger scale. They'll need to assess the physical damage to the infrastructure, the cost of repairs, and the potential impact on the project's future revenue-generating capacity. It's a complex process, and it can take time to get a clear picture of the full financial impact.
So basically, they're still trying to figure out how badly they were hurt by this flood.
Exactly. And in the meantime, they've already had to write down the value of their investment, which means they've acknowledged that it's worth less than they originally thought.
Okay, so that's never a good sign. So they're facing potential losses on this investment on top of everything else.
Unfortunately, yes. And until they have a better understanding of the full extent of the damage and the potential for recovery, it's another source of uncertainty hanging over them.
It's like they're juggling all these different challenges. The cash flow issues, the regulatory scrutiny, the governance concerns, and now this damaged investment. It's a lot to handle.
It definitely is. And it highlights the interconnected nature of financial risk. One event, like a natural disaster or a corporate governance scandal, it can have ripple effects across a company's entire financial structure.
Okay, so we've covered a lot of ground here, from profits and losses to floods and resignations. It's amazing how a deep dive into some financial statements can reveal so much about a company's inner workings.
It really is. And I think it's a good reminder that investing is about more than just looking at the numbers. It's about understanding the story behind those numbers, the risks involved, and the potential consequences of those risks.
Before we wrap up this part of our deep dive, I'm curious about one more thing. You mentioned earlier that PTC India had submitted their responses to SEBI regarding those inquiries. What exactly did they say and how did SEBI react?
That, my friend, is an excellent question, and it's one we'll explore in detail in the final part of our deep dive. Stay tuned.
Okay, so we're back and ready to finish our deep dive into the world of PTC India. Before we took a short break, we were talking about those inquiries that PTC India received from SEBI, the regulatory body in India overseeing their securities market. They submitted responses to those inquiries, but we didn't get a chance to discuss what they said.
Right, exactly. And when SEBI starts asking questions, it's a pretty big deal. Companies tend to take those inquiries very seriously. So naturally, we want to know what PTC India said in response to those concerns that were raised about their governance and compliance.
Okay, so could you remind me again, what were the main issues that SEBI was looking into?
Well, they were looking into several things, including those allegations raised by the former independent directors who resigned, remember. They also wanted more information about that complaint they received back in 2018, and they were also digging into potential violations of the Companies Act by PTC India Financial Services Limited, or PFS.
Right, right. A lot of potential issues on the table. So what did PTC India say in their defense? Did they admit to any wrongdoing, or did they try to downplay the situation?
Well, based on the information we have, it seems like they took the nothing to see here approach. They basically refuted the allegations raised by those former directors, claiming that they had addressed all of the concerns raised by SEBI and that there were no major lapses in corporate governance.
So they're saying everything's fine, just a minor misunderstanding?
Pretty much, yeah. They even went a step further, and they provided detailed explanations to the stock exchanges, trying to reassure investors that everything was under control and that their business wasn't really affected by all of this.
That's interesting. It sounds like they're trying to project this image of stability and confidence to calm any nerves in the market. But the question is, did SEBI buy it? Have they responded to PTC India's explanations?
That's the tricky part. As of right now, SEBI hasn't made any public statements about their findings or whether they agree with PTC India's responses.
So we're left hanging a bit, still waiting for that final verdict.
Exactly. But even though SEBI hasn't given their official decision yet, there's one piece of information that I find particularly intriguing.
Oh, what's that?
Well, we know that PTC India officials actually met with SEBI representatives in July 2024 to discuss the matter further. It was a face-to-face meeting to go over all those responses they had submitted.
A face-to-face meeting with the regulators.
Yeah.
Yeah, that does sound pretty serious. I mean, to me, that suggests SEBI isn't just taking their responses at face value, right? They want to dig deeper, ask more questions, really get to the bottom of things.
Exactly. It definitely adds another layer of complexity to this whole saga.
Yeah.
And even if SEBI ultimately decides that PTC India didn't do anything wrong, legally, the fact that they're under this level of scrutiny could have a lasting impact on their reputation.
So what you're saying is that even if they come out of this legally unscathed, their reputation might already be tarnished.
Exactly. It's like a cloud hanging over them. Investors might be hesitant to put their money into a company that's facing so many questions about its governance and its practices, even if those questions are eventually resolved.
Makes sense. Trust is such a vital part of the financial world. Okay, so we've covered a lot of ground in this deep dive. We've gone from profit reports and cash flow concerns to regulatory inquiries and boardroom drama. It's been a wild ride through the financial landscape of PTC India.
It really has. And I think it highlights something really crucial for anyone who's interested in investing or just understanding how businesses work.
And what's that?
Well, I think it shows that financial analysis isn't just about crunching numbers. It's about looking beyond the headlines, understanding the context, and seeing how all these different factors connect to tell a story.
Right, connecting the dots. So as we wrap up our deep dive, what are your final thoughts on the PTC India story? What should our listeners take away from all of this?
Well, I think the biggest takeaway is that PTC India is at a crossroads. They're facing some very real challenges, from financial concerns to governance issues, and even the uncertainty surrounding that damaged investment in Sikkim. Their future success hinges on how effectively they address those challenges and restore investor confidence. It's a story of potential, but also of uncertainty.
So it's a bit of a cliffhanger. We don't know for sure how this story ends.
Exactly. And that's the thing about the financial world. It's constantly changing, and there are always new challenges to navigate. For investors, it's a reminder that due diligence and research are crucial. Don't just rely on the headlines or the initial numbers you see. Dig deeper, ask questions, and understand the risks involved before making any investment decisions.
That is great advice. I know I'll be thinking twice before making any hasty investment decisions from now on. Thanks for taking us on this deep dive into the world of PTC India. It's been an eye-opening experience.
The pleasure was all mine. It's always fascinating to uncover the story behind the numbers. And to all our listeners out there, thanks for joining us on the deep dive. We'll catch you on the next episode.